Hey guys, Alchemist here. So firstly, I hope you've enjoyed that new little intro that I've put together. It's not great. I am going to have a nice little montage a little bit later with just some clips of me actually trading and trading in the gym and everything like that. But just for now, while I'm just trying to get everything up and running, this is the intro I'm going to be running with. And with today's video, we're just going to do something a little bit different this week. So we're going to do an outlook on AU, on EU, on US30, and on GU. But before we actually get straight into that, let me just give a quick shout out to everyone who has actually joined early now to the Discord channel. So everyone who has actually put their email on the waiting list, please do check your email because I have actually just announced early access to the Discord for those that want to get started before the course's full completion. And we do have quite a few members in there now. And we actually have shout out to Webster, who has already just taken a trade which has earned him more than what my course actually cost. So I'll quickly show you that as well. So we've got the Discord here, and the other day, I think it was on Thursday. So we'll go, it was this trade here. So I'd done my outlook, which I do before London Open every single day, and we can actually scroll up and see I've been doing this for quite a while now already. So on Thursday, which one was it here? Sorry for all the scrolling. Yep, it was here. I was telling the guys that we've swept this 15-minute flip zone to the left, and this is one of the requirements for the liquidity model that I've built. And that if we'd come down to here and we got the liquidation on the 1 minute that we would be looking for, then it would be perfect to actually enter short into one of these levels. So that was posted before London Open. And then if we actually have a look when I posted that, I've gone too far. Apologies, should have had this better prepared. We see Webster here actually taking the exact one that I had posted, and he actually was able to bank 20R off this move. And I will just be, I'll be posting the MT4 clip here, and we can actually see that this was after he'd taken some partials too, and that he has actually now redeemed the whole cost of the upfront fee, the lifetime cost of my course. So anyway, now that that's taken care of, and please do, I'm just letting you guys know one last time, the waiting list is genuinely about to close. If you're interested, please let me know. So let's get into the weekly outlook for AU, and then we'll follow on with the rest of the pairs. So we sort of know where we're trading from here. Was this buy to sell? Just go, yeah, here we go. So this was the demand. And then this was our supply. Okay, that's all we need to do on the weekly. Let's drop down to the daily. Now previously, the breaker structure was here. So this was the daily boss, meaning that this was the daily high. And then once this high was taken, we then switch our daily breaker structure to this one here, meaning that's our daily boss. Get rid of that. And we can drag the highlighter to here, meaning that's our daily low. Now on the daily, I need a pullback of at minimum 110 pips to then mark the daily high. This one here has only been 80 pips so far, so we can't yet mark our daily high. So that's all we need to do on the daily, and we'll jump down to the 4 hour. On the 4 hour, it's actually the same breaker structure here. So this is going to be the daily plus 4 hour breaker structure. Meaning this is our daily plus 4 hour low. And for the 4 hour, we need 90 pips. So yeah, we still haven't had that pullback. No. So we can't yet mark our 4 hour high. We can sort of just pull this here. Whether or not this is actually the target is yet to be seen, but that is a really nice area that I've been telling the guys about for a little while now, especially with all this liquidity that's built up. Whether or not we actually reach there is yet to be seen. But this is our 4 hour range up until now. This is our 4 hour breaker structure, and this is our 4 hour low. And if we identify some zones here, we can see this as a catalyst for a pullback. You can see this lower wick as a catalyst for a pullback. We can also see these interaction wicks. Which actually would have interacted with this supply zone to the left. And then this is when demand took over and actually pushed us up, creating this 4-hour breakup structure. And in here, there's nothing really very significant at the moment. We did sweep below this. So on the 15-minute, there'd probably be a nice zone here. This is just a sweep. And then if we look to the left again, we've just swept above this. Okay. And then this had mitigated this. And this sort of came into this whole range, but not tapped anything very significant on the 4-hour. So they're the levels that we need to be aware of, and then we can jump down to the 15-minute and actually frame our trades. So with the 15-minute, once we had this pullback of greater than 22 pips, 70 pips, this would have been our 15-minute high. Then once this failed, this would have been our 15-minute breakup structure. Okay, then this would have been our low. And then once we had another pullback greater than 22 pips, this would have been our 15-minute breakup structure. And this would have been our low. And then again, we've had a pullback greater than 22 pips, leaving that to be our 15-minute high. And this actually remains to be our 15-minute low. So currently, this is the range that we're trading within. The 15-minute is bullish, but again, we just need to ask ourselves, why is the 15-minute turning bullish? Given that the 4-hour and the daily is also bullish, but overall, I am still bearish on this pair. However, it's turning bullish to push us into a better priced zone for us to be taking continuation shorts to take out all of this internal range liquidity, and there's quite a lot of that there. So all of this is internal range liquidity and internal range liquidity. And if you're not aware of what that is, I will be covering it off in depth in the course. So ideally, what I would like to see with AU is come up to here, give us a bit of a reaction, hopefully push all the way up into this ideal zone. And then we get our shift in structure to take all of this liquidity out. And then this would be the really nice area to be taking continuation shorts to take out all of this internal range liquidity and to actually fail and make this daily low fail, because currently that is the direction that I see AU heading towards. And now let's have a look at the next pair. Okay, now let's have a look at EU. I'll be honest with you guys, I think I've traded EU maybe once or twice this year. I haven't actually seen this chart at all. It's the first time I'm looking at it in a very long time, but the same exact models and rules apply. So it's just like any other chart. So let's have a look here. And firstly, the first thing I want to identify is where we're currently reacting off of. We're on the weekly at the moment. So if I just scroll to the left and see where this horizontal bar falls. So it's this little guy here, which actually swept the liquidity below the previous lows and caused this massive expansion above. And get rid of this, and we drag this across. You can see that that's exactly where we're tapping into now. So we can identify that as our weekly demand. Now I'm looking for a breakup structure and a supply zone above that caused that breakup structure. So I can quite quickly see this here. So that would have been a breakup structure. And then there would have been interaction here. This actually swept the liquidity above these two. And that's on the weekly, so that would have been very significant. We can actually see here these interaction wicks as well. So this is actually where I'm going to be marking out my supply. We could use this whole POI, but it's huge. That's going to be like, yeah, it's 250 pips. We can just use this here as our weekly level, which is the buy to sell that broke structure. And then we can go down and refine it on the lower time frames. For now, we're going to get rid of these because that's not what we mark on the weekly. And we're just going to stay systematic and using the exact same approach every time. Consistent efforts and consistent actions breed consistent results. So all we're going to do on the weekly is look at the supply and the demand. And now let's jump down to the daily. So on the daily, we can identify quickly here as well. And I promise you, once you become a member of the course and you go through all the content and you have a bit more time with me, you'll be able to spot this very quickly. But this here is our daily breakup structure. Okay, I'm not going to keep going into calculating each single one. I will in US30 when I have a look at it later in this video as well, but we can quickly see this as our daily breaker structure. Look at this as our daily high. And then after this pullback, if it's greater than 100 pips, which it looks like it is, yeah, that's 300 pips. We can therefore identify this as our daily low. And then that's all I need to do on this time frame. Let's go down to the 4 hour. On the 4 hour as well, this is going to be the exact same breaker structure level that I'm using. So this is going to be the daily plus the 4 hour breaker structure. Therefore, this is our daily plus 4 hour high. And this is our daily plus 4 hour low. Okay, let's drop this so that we're aware of premium and discount. And let's identify some POIs. Okay, so if we just neaten this up a little bit. I got a bit of OCD with my charts, just making sure that they're as neat and clean as possible. Okay, so we're looking for zones hopefully inside premium to continue this short, but we can also just have a look here and see what we're currently reacting off of. So let's see what this is coming to on the left. If there's a nice zone that this is playing off of. Come on. Yeah, like I said, guys, I really haven't looked at this chart at all. We can probably say that that has had some interaction, especially given how we've tapped, come up and swept with this higher wick. So what I mean by that is if there is a demand zone to the left here, which I'm sure there is, here, this would have been the sweep after we had absorbed all the orders that were sitting in there. And again, that'll be covered off in the course as to what I mean by that. If we get rid of this, we can see that this last POI here is currently actually where we're holding, and we haven't actually closed above at all. We've actually just swept above. Okay, and now we are holding at this little POI. And we're sort of stuck here between supply and demand. Hopefully we'd want to see demand holding just a little bit longer to push us up into a more well-priced supply level, to therefore be able to continue to take the continuation short. So if we look at this here, and also see that there's been interaction here, and then it would be this, where the actual move that caused the breaker structure originated from. Again, there's a liquidity sweep there. These are all the little nuances that you need to be able to pick up. And then here as well, this would have just mitigated this. And this mitigated this. Okay, and these actually now have formed liquidity to be swept. And we can see this zone above here. Sorry. Oh, come on. This zone here, which has been engulfed as well. That's a really nice level. Whether we make it all the way back up here or not is yet to be seen. Currently, we just need to look at where we're currently trading within. So this is our 4-hour range. We're going to see if these highs are going to fail and allow us to push further up to take shorts from here, or whether these are going to continue to hold, or whether this itself will fail and we will take out the low here. I don't think we've yet reached our objective on this time frame for EU, to be honest. I think we could be seeing higher prices tapping into one of these levels before we take this continuation short. And how that would look is, we can even see here, be a nice little level there. So potentially what would need to happen is, because currently right now we're at fair exchange, after this big bullish expansion, we can see a lot of orders have just been exchanging hands, but no one's really in control at the moment. That's another question I like to ask myself all the time. Who is in control? Currently, we can see the momentum is bearish. The control is supply. But in this little price action here, this little square here, mark it out for you. In this box here, we can see it's sort of at fair exchange. It's not really demand that's really taking over, or supply. So we want to see this whole area fail. So we'd either want to see a sweep, and then our entry model playing out 15-minute change character, then the liquidation, then the entries to continue short into maybe here or here. So these would be catalysts for pullback before the actual low failing. Or we see price push down a bit further, gather enough orders to break this, maybe have a reaction from here. Whether or not it would actually cause the move that would come all the way down would be yet to be seen. We could potentially actually see the expansion into this zone, which then would give us a very nice level to play shorts off of. So now we've marked out what we need to on the 4 hour. We know our breakup structure, we know our high, we know our low, we've got our POIs. So let's have a look at the 15 minute. Yeah, so this has all been not very nice price action. Personally, I wouldn't be looking to trade this at all until either this high or this low failed. Okay, we can identify within here. This would have been a supply level. Once we'd interacted, we pushed down. This would have been a sort of demand flip, where is price currently holding from. And then we have liquidity in the form of these highs here. We have this extreme, which is unmitigated. Yeah, just missed. But we are also building liquidity to the downside here as well. Looking at this, I am actually seeing that there is likely to be quite a big move on EU in this coming week. And it would either be sweeping this liquidity, tapping into this unmitigated supply zone here, giving us a reaction. Then once we get the right signal here, we could actually be taking shorts because both the daily and the 4 hour are bearish. I know we're not completely into premium yet, and EU actually does like to hit 50% EQ a lot more than AU does, but we don't want to just be waiting for that and miss our opportunity. So we need to accept the risk if we are going to be taking it, and then we'd be able to take a short from here. Ideally, we'd want to be taking full profit at either this zone here or this last sort of catalyst for a pullback, because at either one of these levels, we could then see demand holding to push us further back up into premium. Okay, that's all I wanted to cover off on EU. And if you have any comments or you think I've missed something, please let me know in the comments. Okay, so now let's look at US30, and I'll be honest with you guys, this is the first time I've actually looked at this pair. So for all you guys out there that actually trade it day in and day out, please let me know if you have a different outlook in the comments below, and if you'd like me to change anything or if there's something I've missed, please highlight that to me too. So we're just going to start off again on the weekly, and I wanted to see where we currently just started to have this pullback from, and we can see it was from this big bullish candle here, which actually initiated the move that caused this whole breakup structure. So let's mark this here as our demand level. Okay, and then the supply that actually caused the lower low, so when this broke here, is this guy above. So let's mark this as our weekly supply. And that's all we need to do on the weekly. So let's jump down to the daily. And we can see here where I marked out the line on the weekly. This is actually our daily breakup structure. So that hit there is 280 pips. Since then, we can see as well that this has been a very corrective pullback, whereas this here was a nice strong impulse down. And this up here in my charts that I've got, which is the acronym WITM, that actually stands for where is the momentum. And if we look at this, right, we can definitely see that the momentum here is bearish, and then this bullish pullback has been extremely corrective. So what that's showing me is prices just trying to build up liquidity to continue lower, and we just need to wait to tap into something a little bit further up, maybe something in this buy to sell here, and then we would actually see the continuation move short. But for now, let's not get ahead of ourselves. Let's just put this as our daily breakup structure. Our daily boss. Therefore, we'd have this as our daily high. And if you guys haven't watched my market structure video, please do go back and watch that. I'll just leave a note in the top corner here if you want to click and watch it now. So there's the daily high, and then the daily low is only actually confirmed once we have a pullback of greater than 100 pips. So this one here is 224. So this here is our daily low. And that's all I need to do on this time frame. So let's jump down to the 4 hour. Okay. So in the 4 hour, I want to investigate this leg here where I identified that's where the momentum was. And I want to identify some POIs. Now for a POI to be valid, there are quite a few different criteria it needs to meet for myself. This will all be covered off in depth in the course. But the most important one is that it needs to have supply and demand interaction. So what I mean is it needs to have reacted to something on the left, given us a reaction, and then that's where we can identify it as supply if it then leads to a break of structure. Okay, I'm going to go into it in a lot more depth in the course, so please do join the waiting list if you're interested in learning more. But what I can highlight for you here, right, is that this here was a demand zone. Okay, it had this break of structure in the past, so it originated from here. Once price tapped into this demand zone, we can see it gave a slight reaction, and then it failed, and then caused this break of structure. Therefore, this whole sort of range is a valid POI. And you can see that that's exactly actually where price is rejecting from at the moment. Okay, and if you look further down, obviously here that there's a gap in this chart, but there would have been an interaction from the left here. We swept up. So this here would have been a nice POI. We can see what actually happened was we swept the liquidity above this. We never actually got two candle closes outside. So this would have just been a sweep. And then we pushed down and then held from this demand zone, which is now pushing us back up into this flip on the left to then see whether we are going to continue higher into this zone before we see the continuation down, or whether we are going to start falling from here. But we are just going to get into that a little bit more, but I'm going to get rid of these for now. I just wanted to show you sort of where price has been reacting from. So we can get rid of this, get rid of this. Okay. So ideally, this is also going to be our 4-hour break of structure. And why that's going to be our 4-hour break of structure is, so if we see here, once price actually came into this weekly demand that we marked out at the end, at the beginning of this part of the video, we pushed up and then this actually broke. So let me just mark it all out for you. Once this low broke, this was actually our lower high. And once this lower high breaks, what we need to do is to see a pullback. If we're on the 4-hour, for AU, I use 90 pips. For pairs I don't usually trade, I'm just going to use 100 pips just as a guide. 80 to 100 pips. It's sort of just, you can see it as well just with time. But essentially, once we had this pullback, we can then identify that this was our 4-hour low. So let me just mark that out for you too. Okay, that was our 4-hour low if we go back in time and before all of this happened. So what we then wait to see is whether the low is going to fail first or whether the high is going to fail. In this case, the high failed first. Okay. Once this high failed, we then identify this as our previous low. Sorry, not that one. Just get the highlighter tool. So this would have been our low and this would have been our high. We can just drop premium and discount just to illustrate that for you. Okay. And then at this point, we'd wait to see, is the high going to fail first or is the low going to fail? In this case, the low failed first, and therefore that is why I've marked this out as the daily plus 4-hour break of structure. And then once we had this pullback, we can then identify this as our 4-hour low. So we can get rid of this. So let me just drag it across to there. And then we can move this all the way down to here. And now we know our 4-hour range. We know our 4-hour high, which I'll just mark up here. We've got our 4-hour high. We've got our 4-hour break of structure. We've got our 4-hour low. We've got the POI here, and let's just investigate a couple more. So we can see here as well. This one is important too because it has had interaction with this demand zone. So when price pushed into this demand zone, pushed up, swept the liquidity above these highs. Let me just zoom in. And then caused a minor break of structure, which would have been a break of structure on the 15-minute. Then we can also see all the liquidity stacked above these flat highs here. So that's all liquidity to be swept. And we actually have this unmitigated extreme. So we have the unmitigated extreme here. We have this interaction flip supply level here. and we have this one which we're currently reacting off of right now. We can also see that all of this is now built internal range liquidity. If you're not familiar with what that is, it'll be covered off in the course as well. And let's just mark some catalysts for pullbacks. So we got this guy. That's a nice important one because it's got a big liquidity sweep here too. And then if we look up as well, we've got this range. And then we've even got this wick, which is what's currently holding right now. Okay, so let's just do a quick recap. We've looked at the weekly. We know that we've just tapped into this weekly demand. We can see that it's actually looking like it might fail because it failed to put in a higher high. So this high here was a lot lower than these highs, which would have been the previous one on the higher time frame. The daily and the 4 hour are both bearish. We've just tapped into this flip level to the left, and we're waiting to see if supply is going to hold or if demand is going to take over, pushing us up into a higher supply zone before we see that real continuation level. The real continuation move short. And the other POI that I want to mark out here as well is just the extreme. This is also just a catalyst for a pullback. Essentially, none of these levels should really hold. They will give us a bit of a pullback, and then that'll give us actually the opportunity to enter short. So we could be looking at shorts off of each one of these levels if the actual model plays out. So that's all we need to do on the 4 hour. Let's have a look at the 15-minute. Okay, so similarly with the 4 hour, how I went back to see how price had originally interacted with this zone and then started marking the breaks of structure from here. I'm just going to look at that here as well. Okay, so if we zoom in a little bit, I want to be able to cover a lot of the price action, so I'm not going to zoom in too much. But if we look at this level here, right, price pushed into this demand. It gave us a very nice reaction, and then it failed, making this here our last lower high. And then this, once we actually pushed lower, this would have been the low. So at the time, this would have been the 15-minute low. And at the time, this would have been the 15-minute high. Okay. We can see then what we would have waited to see is whether the low was going to go first or the high. In this case, obviously the high fails first. So that's our 15-minute break of structure here. And then as we pull up and give a pullback, so we'd wait to see, obviously on AU it's 22 pips. This here, that's 37 pips of a pullback. So this would have been our new 15-minute high. And then we actually here have one candle closing outside, two candles closing outside. So that would have been our 15-minute break of structure. Therefore, this would have been our 15-minute low, and this would have been our 15-minute high. This one fails first. So this would have been our 15-minute break of structure. We can delete that one just so we're only overworking with one, not to get confused. And then what we'd wait to see is a pullback greater than, again, on AU I use 22 pips, but on this one we can just sort of see this here as 28 pips. So this would have been our low. And essentially we can keep doing this over and over again, but what I want to show you now is once this high fails, because this is the one that is actually where price is leading us now. Okay. It's our 15-minute break of structure. Now if we zoom out, we can actually see that this is where price is currently trading. We can locate that after this 15-minute break of structure, this would have been our 15-minute low, and this being our 15-minute high. Get rid of this, get rid of this, get rid of this, get rid of this, get rid of this. And now all we need to focus on, just so that we can keep our charts nice and tidy, is this range. Again, in the course, I'll have all of this laid out for you in the Discord. Sorry. But it is important to be able to know how to map this, and I will have assignments on this on the course as well, which you'll need to pass before actually progressing on to the next section, because if you don't understand this, if you don't understand market structure and market direction, you won't be able to understand entries, you won't be able to be a consistently profitable trader. So now that we know that this is all we're looking at, we can say that the 15-minute is bullish, but we need to ask ourselves, why is the 15-minute turning bullish? Okay, given that every other time frame is bearish. And it would be to push us into this zone or potentially a little bit higher, just so that we can actually enter off a well-priced zone that's got interaction, which led to a break of structure, which the real continuation short would actually play out of. So what I mean by that is, what we could see is we can either sweep this zone and continue into here, give a bit of a pullback, continue lower, pullback, lower, something like that. Or we could see demand holding a little bit longer. We could sweep a little bit, push up, and then we could actually take the shorts from up here. This is a better zone to be taking the continuation short that's actually going to break this daily low, just because of how well it's situated and the actual how many orders were stacked here as opposed to the small amount of orders here relative to these. This is still considerable amount. However, we're not just going to wait till price comes here. If we do get that signal to enter short after this sweep or after this fails, then we will enter short from there. So that's all I wanted to cover off on US30. Oh, sorry. Again, if you guys see it a bit different, please let me know. I'm more than happy to jump on a call with you as well and we can go through it. Otherwise, let's move on to the next pair. Okay, and lastly, let's have a look at GU. GU is a pair I personally haven't traded at all this year. It's one of those pairs that back in the day when I used to trade support and resistance, just sort of a retail strategy, I did get burned by this pair quite a lot. And I really don't like it, to be honest. There's a few characteristics about it with all these wicks that I just really don't like trading. A lot of the time we sort of see the perfect setup play out and then you get swept. And whilst with AU, obviously that does happen too. With AU, I've actually put in the work to make sure I learn how it sweeps. With GU, I might just not have actually tested it enough. But personally, I just don't like its characteristics. But I do know a lot of people like to trade it, especially because it does have a much larger average daily range. So it's ADR, and you can capitalize on quite a lot of pips on it. Although you do actually need a larger stop loss. So at the end of the day, whether the risk and reward is any better is up to debate. But that's what I'm doing here. I'm just doing a forecast for you guys. So let's get into it. So starting off on the weekly as well, we can sort of just start to see what are we tapping into here. When we get such a large zone like this, I'd like to just drop down on the daily and actually identify this rather than marking out a demand level of, this looks like 400 pips or so, 1,000 pips. But so let's just drop a horizontal bar here. And although I don't like going to the daily before actually marking it out on the weekly, I can't actually mark this on the weekly. That's way too large. So let's have a look on the daily, see if we actually tap into something a bit more significant. Okay, that's better. So if we look at this, this was a large wick up to the, up, and then we failed to push up higher. We had here these buy to sells, which is what price is currently tapping into. So this would have been the interaction with something up here. So that would have been the supply level, and this would have been the demand. Again, that would be on a lower time frame, but that's currently what we're trading into right now. And then we'll have something as well that's down here, unmitigated in this week. But this is the important one for this. Now let's go back to the weekly. Let's see if we can more easily identify a supply level. Yep, so we can see this breaker structure, and then we can see this guy here. Fully engulfed, had interaction, nice, and it's unmitigated. Okay, we'll get rid of this. So this is our supply level. This is our demand level on the weekly. That's all we need to do on this time frame. Let's drop down. On the daily, you can see this is our breaker structure. Leaving this up here as our daily high. And after this pullback, of over 300 pips, this is our daily low. Again, that's all I need to do on the daily. 4 hour. Did we close above here? No, so that's a sweep there. Given we haven't closed on above here, I'm going to use this same level as my 4-hour breaker structure. Why it would have been different is if I had inspected all of this, at one point this would have been a higher low, and then once this higher low had then failed, we would have seen a 4-hour bullish breakup structure. But because this was actually just a sweep and we haven't broken and closed above, we can conclude that this here is also going to be our 4-hour breakup structure, leaving the daily and the 4-hour still as bearish, making the daily high also our 4-hour high. and the daily low also being our 4-hour low. Get a bit neater. I really do have OCD with this stuff, guys. All right, now let's mark out some POIs. Okay, so I can quickly see this here. Okay, also let's just drop a premium and discount. Okay, so this here actually is in premium, so that's good. This mitigated this, so we can see sort of a chain. You can also see, if we look into it a little bit closer, that this would have been a demand zone. Price then tapped into it, left these buy to sell wicks, which would have been what caused this break of structure in the past. And it's currently, price is just swept above there. There'd be something on the lower time frame inside here. I'm not going to mark out this whole POI on the 4-hour. Whether or not the 4-hour has actually completed its pullback is yet to be seen. GU, like EU, actually does like to come back at least to EQ, so we could see price coming back into one of these levels before continuing short. There is a really nice POI here as well. It is very far away though. Yeah, that's still 250 pips away. If demand does continue to hold into these levels, would be a very nice place to take shorts from here. In the previous video, of US30, when I said more orders had been exchanged here, when you see a large sort of, so this here would have been over the span of 11 days. So 11 days of orders being stacked, and then we see here a last little push up and then a real bearish momentum enter. This would be a place where a lot of orders are resting. So if we tap into here, we can sort of expect a more aggressive reaction, as opposed to something like this, which would have been just 4 candles, so 12 hours or 16 hours, sorry, quick math. So yeah, we can definitely see that this would give us a more aggressive reaction than this zone would. So this would be ideal. It is still so far away. We're not just going to wait for that. We're just going to continue with the order flow on the day. But so that's our 4-hour. Let's mark out some CPBs below. So we'll always have the extreme. And then let's just see interaction. So here, this tapped into this, left this wick, but then it failed. So that's not really relevant to us at all. Did this hold? Yep. So this is the catalyst for pullback that's actually pushed us above here. It hasn't actually fulfilled its objective of creating a new higher high, because it actually just swept and didn't close back within. So just looking at this, if we start to see 15-minute demand zones failing, we can take this to be a targeted low. Again, all of this will be covered off in the course. And then we have this last little unmitigated one, which is actually just above in premium. This would be a really nice level. So we will just drop down to the 15-minute and have a look. But ideally, if we saw demand holding, and given all these wicks to the downside, GU loves to leave some wicks behind. It's sort of giving me an indication that demand does still want to hold. So what we could see potentially is price coming back up into one of these levels. From here, once we get our 15-minute shift in structure, we could definitely be taking continuation shorts, because we're in premium. We're in a nice zone, which would have had interaction with these wicks here. It also did cause this break of structure. So it is a very nice level. We could probably, let's draw that back up. We would probably take full profits at this zone, because even though it is a catalyst for a pullback, we could still see that these are liquidity being formed and that this actually is the main target. So what I mean by that is we could tap into here and we could actually see another shift that could take us all the way back up to here, which would actually lead to the move that breaks this daily low. That's yet to be seen. Given that if we'd entered here with, even on GU, if we were taking a 5 pip stop loss, that's 280 pips. So it's a lot of I'm not going to sit here and calculate it, but it's a lot. So we could definitely be taking full profits here, and even like a lot earlier. And this would be the last sort of zone if we were holding a 10% runner. Something I was talking to the guys in the group about yesterday, and shout out again to Webster, is that if we are going to hold a runner, it's only going to be if we've entered off a zone which was well priced in premium for shorts or well priced in discount for longs. and a zone which has actually been the original move that caused the break of structure. So what I mean by that is if we were to enter short here, for example, I wouldn't be leaving a 10% runner because I'd still be waiting for price to come back up to fulfill its original objective of coming back into premium. And so if I was to take a short from any one of these gray bars here, then yes, I would definitely leave a 10% runner all the way to the low. Otherwise, I'd be just taking full profit at the next demand level. So let's have a look at the 15-minute. Get rid of this. Jesus, yeah. So just like EU, all this price action is really not very nice to trade in. So I'd wait for this high or this low to fail. This sort of corrective consolidating price action is never really a fun time. Let's try to make sense of any of this. So we've got this here. That gave us a slight reaction. And see, price actually looks like it came into this. So that's what's currently holding here. This was sort of insignificant. It just got smashed straight through. And then we've got liquidity as well being built up here. We have this unmitigated wick above. Let's start from the bottom now. We've got this CPB, which again is unmitigated. Price almost came in and tapped it, but missed. There's no liquidity sweeps here. Neither there, nor there, nor there. We do have this POI, which was well formed. Okay, so now we're just waiting to see if this catalyst for a pullback is going to hold, push us further up to tap into here. And once we've tapped into here, once we get a 15-minute shift, we can definitely take shorts from this level. Or we could already start to see price failing to hold here, tapping into one of these catalysts for a pullback, either this one here or this, before pushing us back up into one of these levels. Then we can continue short. Or we could just break through this, come back up to one of these ideal zones, which is where we could take the actual short. Okay, I'm actually just going to drop an alert here. I won't be trading it because I only trade AU, but it would be nice to see if price does actually come back into this area, and ideally this one, how price would actually react. But yeah, so that's all I wanted to do here today, guys. Please let me know if you've enjoyed this sort of outlook. If you want me to be doing it every week, and if these pairs are enough, or you want me to cover different pairs or more pairs. If they will be more pairs, I probably won't be jumping down to the 15-minute. It might just take a little bit too long. Just as well, I'm conscious that people don't tend to watch YouTube videos over 40 minutes or however long this one's gone for so far. So yeah, just give me your feedback and let me know what else you'd like to see on the channel. Again, I just want to let you guys know that the waiting list is genuinely almost closed and prices will be going up significantly. So if you like the way I do things and if you're interested to know more, please do join that waiting list. Drop me a DM, whatever you want to contact me on. All my socials are in the description of this video. Otherwise, I hope you have a great week ahead, and I will see you guys in the next one.